Hello everyone, welcome back to my YouTube channel. My name is Ayu Endalestari, you can call me Ayu. I'm a student of Mercubuana University majoring in accounting. In this video, I will explain about managerial accounting. Okay, let's go straight to the video. Happy watching! How managerial accounting helps in decision making? Managerial accounting is very effective in highly competitive and fast-paced business environment where quick decisions need to be made. These decisions may have to do with a sales tactic, budgeting, or cash flow management. Managerial accounting will use operational data to make sense of the situation quickly. The goal is to use the budget to help make short-term operational decisions that will help increase the company's operational efficiency. Types of managerial accounting that add value to your businesses. First, margin analysis. Managerial accounting analyzes the incremental benefit on increased productions. This is called margin analysis. This flows into the break-even analysis, which involves calculating the contributions margin on the sales mix to determine the unit volume at which the business gross sales equal total expenditures. A managerial accountant will use this information to determine the price point for product and services. Second, constraint analysis. Constraint analysis indicates the limitations within a sales process or production line. Managerial accountants find out where the constraint occur and calculate the impact on cash flow, profit, and revenue. Capital budgeting. Managerial accountants help a business decide when, where, and how much money to spend based on financial data. Using standard capital budgeting metrics, such as net present value and internal rate of return, to help decision makers decide whether to embark on costly projects or purchases. The process involves reviewing proposals, deciding if there is a demand for products or services, and finding the appropriate way to pay for the purchase. It also outlines payback periods so management is able to anticipate future costs and benefits. 4. Trend analysis or forecasting. Reviewing the trend line for certain costs and investigating unusual variance or deviations is an important part of managerial accounting. Decisions are made by using previous information like historical pricing, sales volume, geographical locations, customer trends, and financial data to calculate and project future financial situations. 5. Product costing or valuations. Determining the actual cost of products and services is another element of managerial accounting. Overhead charges are calculated and allocated to come up with the actual cost related to the production of a product. This overhead expense may include the number of goods produced or other drives related to the productions, such as the square foot of the facility. Along with overhead costs, managerial accountants use direct costs to assess the cost of goods sold and inventory that may be in different stages of productions. What are managerial accounting reports? Managerial accounting reports use budget reports to help each manager to overbetter employee incentives, cut costs, and renegotiate terms with vendors and suppliers. Here are a few types of managerial reports. Account receivable aging reports. Does your business rely heavily on extending credit? Then an account receivable aging report is vital to your operations. This report breaks down the remaining balances of your clients into specific time periods, allowing managers to identify true debtor and identify issues in the company collection process. If your company has many debtors, you may need to complete rehaul to tighten up credit policy, as cash flows is critical to the operations of any businesses. Next, performance reports. The performance of a whole company, each department, and each employee are considered at the end of each term in performance reports. These reports are used to make important decisions about the company's future. Underperformers are sometimes legal and individuals who achieve or overachieve their goals are rewarded for their commitment to the businesses. Performance report can show flaws in workflow setup if, let's say, for example, a whole department is somehow not performing to a certain capacity. A performance report is an important tool to stay on track and company's missions. Cost Managerial Accounting reports. Managerial accounting determines the cost of the article that are manufactured. All raw material costs, overhead, labor, and any added costs are considered, and those totals are divided by the amount of product produced. A cost report offers a summary of these information. This report showcases the cost price of item versus their selling price for managers. Using these reports, profit margins are estimated and monitored. Better optimizations of research can be achieved by having this understanding of all expenses, including inventory waste, hourly labor costs, and overhead costs. Other managerial accounting reports. Other managerial reports that are vital to every business include order information reports, project reports, competitor analysis, and many other similar reports. These reports are either created internally or outsourced through professionals depending upon your company's capability to handle reporting requirements. To make the most informed decisions, companies and managers must have access to authentic data and credible managerial accounting reports. Importance of accounting in parts of businesses are described below. Importance of accounting in planning. This planning is cash planning, sales planning, procurement planning, determining the quantity of stock, development planning, fixing up target profit, etc. are very much dependent of accounting data and information. Next, accounting importance in organizations. Accounting helps management organizations by providing information like percentage of profit over the capital investment positions, management efficiency in controlling, etc. Accounting importance for motivations. The management is to be aware of the financial positions of the businesses for providing financial benefits. Accounting helps management by providing necessary information for making proper decisions. Next, accounting importance for coordinations. One of the main functions of management is to achieve the final target of the business by coordinating various activities of different departments. Accounting helps in coordinating various activities of different departments of the business. Accounting importance media of communications. Accounting plays a vital role as a media in communicating various information from different departments, business, and management plan of actions to various departments. Next, accounting importance in budgeting. The preparation of various budgets is essential to run the business successfully. The historical information which is needed in the preparations of the budget is supplied by accounting. Accounting importance in professional advice. An efficient and honest accountant helps the management with valuable professional advice for development of its businesses. In the modern age, with the complications of business management has also become complex. Uses of accounting information for decision making. The information developed by the accountant's information system can be useful to managers in planning, controlling, and evaluating their organization's activities, owners, directors, and others in evaluating the performance of the organizations and determining operating, compensations, and other policies. Union, governmental, regulatory, taxing, environmental, and other entities in evaluating whether the organizations is conforming with applicable contracts, rules, laws, and public policy and or whether changes are needed. Existing and potential owners, lenders, employees, customers, and suppliers in evaluating this current and future commitment to the organizations. Accounting researchers, security analysts, security brokers and dealers, mutual fund managers, and other in their analysis and evaluations of enterprise, capital markets, and or investor.